Hello everyone, and today we'll be doing yet another question for the ACCA Performance Management exam. The question we're doing today is from the June 2017 past paper. It's from section C, question number 31, and the topic is variances. Okay, so variance is a very popular topic in section C of the exam, or generally in the exam as a whole. And the type of variance questions that you can get in section C are either going to be the type like mixed yield variances or mixed quantity variances for sales, calculating those and analyzing those, or they could be the planning and operational type variances. Okay, so without further ado, let's get into the question. Okay, as always, we'll start with the requirements first. So part A, calculate the material variances in as much detail as the information allows for the month of February, right? And this is for 7 marks. Now, what does it mean when it says in as much detail as the information allows? Basically, that's a hint from the examiner that he wants you to calculate the material variances, which are basically material price variance and material usage variance, and then split them up into the planning and operational variance components. Okay, so whenever they ask for as much detail as possible, they're basically telling you to calculate in terms of the planning and operational variances. Okay, so we have our two variances. Let's start by just making the template for our answer. So this is question number 31. As always, we'll start with column A, where we'll have separate labels for the question and the parts that we do, so that they're distinguished from the rest of the answer and make it easier for the marker to follow. Okay, and remember to make those bold, italic, underline, something to distinguish them from regular text. Okay, now there's going to be two types of variances: material price variance and material usage variance. Okay, so if we're going to use shorthand like MPV for material price variance, let's just write that down. So material price variance is equal to MPV, and material usage variance is equal to MUV. Okay, and then we have the planning and operational components. Okay, so let's start with the material price variance. So again, we're gonna use some shorthand, so we might want to write them down, or we might just write them in the actual cells that we do. So material price variance is equal to, and we'll put in our formula. So it's the standard cost in brackets. It's the standard cost per kg if we're dealing with kg, or in this case, or maybe we're dealing with something else like meters possibly. Let's just read the question to find out. So it says the school uniform company manufactured school uniforms. One of its largest contracts is with the Girls Private School Trust, which has 35 schools across the country, all with the same school uniform. After a recent review of the uniform, the school's spring-summer dress has been redesigned to incorporate a dropped waistband. Each new dress now requires 2.2 meters of material, which is 10% more material than the previous style of dress required. So it's going to be in terms of, the raw materials are in terms of meters rather than kg. So we'll write that down: per meter minus the actual cost per meter, right? Actual cost per meter. So since we're using the shorthand for standard and actual, let's write those down as well so that it's clear to the examiner. STD standard and ACT is for actual. Okay, so we have this multiplied by R. What do we multiply it by? Think back to the formulas that we covered. So if we have the cost per meter, dollars per meter, in the brackets, and the final variance is in terms of dollars, this has to be in terms of the actual usage in terms of meters, right? Okay, so we have our formula, and then we can write the planning and operational components down later. Okay, and likewise we'll have our material usage variance, which we'll calculate. Material usage variance, which is equal to our standard usage, the standard usage, which will be in terms of meters here, minus the actual usage, again in terms of meters, multiplied by, so we have the meters in the brackets, so outside the brackets we'll have the cost per meter, so the standard cost per meter. Remember, outside the brackets for any usage type variances or any variances dealing with the quantity component, the amount is going to be a standard amount. For the price or cost per kg or that sort of thing, the amount outside the brackets is going to be the actual amount. Okay, so we have our two formulas and we'll split them into planning and operational variances. So we have planning material price variance, which is equal to, let's just drag this a bit, right? And we have operational material price variance, which is equal to, so planning, what do? We compare the old standard to the new standard by replacing the actual amount by the new standard revised amount wherever necessary in the formula. So this will remain the same, but this actual amount will become the revised cost per meter, right? So we have another shorthand, so let's just mention that above, revised standard, right? And again, we're being very detailed here. Obviously in the exam, if you don't have that much time, you can ignore some of these things. The marker will usually be able to follow in any case, but it's better to write them down. Okay, so and for operational, what will we do? Operational, we compare the revised standard to the actual by replacing the old standard amount by the revised amount. So this will become our revised standard, and this will remain our actual and actual usage. Okay, then for material usage variance, same story. What will we do? We have the planning material usage variance, and we have the operational material usage variance, right? So in the first one, we'll replace the actual with the revised, so this will remain the same, but the actual will become the revised usage. So this will become revised usage, and in operational, the second part of the formula will remain the same, but this original standard will become the revised standard, right? Okay, so we have all of our formulas listed down, and now we just have to fill out the cells. So the formula will basically be this cell minus this cell into this cell, and that formula can be copied and pasted for all of these. Okay, so this is the format I'm using here. Again, you can use your own format in the exam. It's not necessary to follow this, but it's just a hint on what you might want to use during the exam. Okay, so let's start with the material price variance. So we have been told that each new dress now requires 2.2 meters of material. Okay, so that's the number of meters per dress, okay, which is 10% more material than was previously required. So this is the material meters per dress or per unit. This will come in our material usage variance. However, a new material has been chosen which costs $2.85 per meter. Okay, so let's stop here because we're doing the material price variance calculation. We have a dollar per meter amount, 2.85. okay, the new material is a new material, so it has to do with the revised material, right? The updated material, which is 5% cheaper than the material used on previous dresses. Okay, so that would have been the old price. The old standard would have been 5% more expensive than the 2.85. okay, so let's fill that down. So we know that our revised cost per meter is 2.85, so we'll fill that out in our relevant cells. Okay, and our old standard, so the 2.85 was 5% cheaper than our old standard. So now we need to be careful here. What does that mean? Is 2.85 the 100% base and we need to increase it by 5% to get to the old standard, or is the old standard the 100% base that we reduce by 5% to get 95%, which is equivalent to 2.85? Because students get confused about this. Think about it. What's being said here, okay? Which cost 5% cheaper than the material used on the previous dress. So the material used on the previous dress is the base, the standard base. That's the 100%. Meaning, if this is 5% cheaper, this 2.85 is 95%, okay? So please be careful. So we're not going to multiply it by 1.05 to get the old standard. Rather, we're going to divide it by 0.95 to get to the old standard, which in this case is 3, okay? So we have these amounts. Okay, after that, in February, the total amount of material used and purchased at this price was 54,560 meters. So we have our actual usage, right? 54,560. So we can put that in our formulas as well, okay? And based on that, we already have our planning material price variance. We just need to find the actual cost per meter to get our material price variance and operational material price variance, okay? So the benefit of putting all the formulas in already was that we were filling out the numbers as we went through the case scenario, right? So it took a lot of time to do all of that, but now we're saving up on time because we're just putting the numbers in directly and getting our answers, okay? Now, it says the design of the new dresses has meant that the new complicated sewing technique to be used. Consequently, all staff required training. The manager of the sewing department said that each dress would take 10 minutes to make as compared to 8 minutes for the old design. So all of this stuff seems to be talking about labor, right? It's not talking about materials. So this paragraph seems to be all about labor. After that, it gives us the activity levels in terms of units, which is fine. And it says the production manager is responsible for all purchasing and production issues which occur. And they use standard costing, and every time the design change takes place, the standard cost card is updated prior to production commencing. However, the company accountant responsible for updating the standards has been off sick for the last 2 months. Consequently, the standard cost card for the new dress has not yet been updated, which is why there's this planning and operational variance issue. But notice one thing. Where did it mention the actual cost per meter? It doesn't seem to have mentioned that anywhere. So what do we do here? Because this is a trick actually, okay? Basically, in this case, it says, however, a new material has been chosen which costs only $2.85 per meter. So that's not only the revised standard, that's also the actual, okay? So sometimes they'll try to trick you and they won't give you a different actual and different revised amount. Sometimes it'll be the same amount like it was here, okay? So in those cases, read quite carefully through the case. If you can't find anything, assume that the revised and actual are the same, okay? So in this case, the actual is also 2.85. And what would that mean? Basically, what that would mean is there would be no operational material price variance because we're comparing the revised to the actual and those are the same amounts, okay? So the only variance we'll have is the planning material price variance. And remember, the planning and operational variances should always add up to the total original variance, which it does in this case. So 8184 favorable, 8184 favorable, and 0. Okay, so we have our material price variances, and they've only asked us to calculate the variances, not to assess or analyze them. So we don't need to go any further there. So we're half done. Now let's talk about material usage variance. Okay, first, right off the bat, we can already have the actual usage in terms of meters because we've already put that in the formula for material price variance. So actual usage we already have here. Furthermore, we already have the standard cost per meter, which we've already used in the material price variance formula. So we can put that here as well directly. Okay, so we're already almost half done. All we need are the standard usage and the revised usage. Okay, now how do we calculate the standard usage? Think back to our formulas, right? It was usually we have to calculate it in terms of taking the actual production in units multiplied by the standard, in this case meters per unit, okay? So if we go back, they gave us the actual production in units over here, which is 24,000. So we'll take 24,000 here, but we need something in terms of meters. So we need to multiply this by the meters per unit. And that was mentioned right in the beginning, right over here. It says each new dress requires 2.2 meters of material, which is 10% more material than the previous style of dress required. So each new dress requires 2.2 meters, meaning that's the revised design of the dress. The old design of the dress only required 10% less than this. Again, what's the base 100%? Is it the 2.2 or is it the old design? It is the old design. Why? Because it says which is 10% more material than the previous style of dress required. So the previous style of dress is 100% and this is 10% more, so approximately 110%. So to get the amount for the old dress, we'll simply take this 2.2, since it's 110%, divided by 1.1 to get the amount for the old dress, which I believe would be 2 meters. Okay, so our standard usage has been calculated, and the revised usage will be very similar in calculation. We'll simply take the actual production in units, which is the 24,000, and multiply it by the revised meters per unit, which in this case was 2.2. Okay, so we have 52,800 revised usage. So we have these amounts. Okay, the material usage variance is a large adverse variance of 19,680. Planning is an adverse variance of 14,400, and if we add that to the operational variance of 5,280 adverse, it should add up to the 19,680 overall, which it does. Okay, so we've done our calculation, and all of this was worth 7 marks. Okay, with that said, let's move on to part B. So part B is also a calculation, this time for 5 marks. This time it says calculate the labor efficiency variance in as much detail as the information allows for the month of February. And labor efficiency variance, not the labor variances. So we don't need to worry about the labor rate variance or the idle time variance. And once again, in as much detail as possible, so we need to calculate the planning and operational labor efficiency variances as well. So let's write them down. So again, we're going to be using a shorthand, labor efficiency variance. We'll use the shorthand LEV. Okay, we've already mentioned other shorthands above, so we don't need to mention them again. So LEV, what was the formula for labor efficiency variance, right? So once again, labor efficiency variance is a variance about quantity, and labor quantity has to do with labor hours. So whenever the variance is a quantity variance, the quantity part will be inside the brackets. So we'll have the standard labor hours, right? Standard usage in terms of hours. So standard usage in hours minus the actual hours. But is it the actual hours worked or is it the actual hours paid? Remember, efficiency needs to be assessed on the actual work being done. So this is actual hours worked, right? And this will be multiplied by, what will it be multiplied by? Think about it. Labor efficiency variance is similar to the material usage variance. Here we were going by standard cost per meter. So here we'll go by standard cost per labor hour. Okay. So there's our formula, and we can input the formulas for planning labor efficiency variance and for the operational labor efficiency variance as well. Okay, so planning, let's copy this down. It's going to be the old standard versus the revised standard, so it's going to be the revised hours, so the revised usage of hours, right? In fact, let's not write usage, right? Because that seems to imply usage like material. So we'll just write standard hours and we'll write revised hours. That seems to work better. Okay, but again, at the end of the day, as long as the terminology is clear, you don't need to worry too much about what words you use, right? You just need to get your point across. Okay, and in the second one, we'll once again copy the original formula. Operational variance, we compare the actual to the revised hours. So this will become revised hours. Okay. So the third paragraph here was contained the information about labor. So it says the dress has a complicated new sewing technique to be used. Okay. So all staff were required training before they could begin production. The manager of the sewing department expected each new dress to take 10 minutes, okay, as compared to the 8 minutes for the old style of dress. Okay, so what can we use this information for? This has to do with the time taken, which is used in labor efficiency variance. Once again, standard hours and revised hours for that matter will be calculated by taking the actual number of units produced and multiplying them by the standard hours per unit. So actual units produced, again, is the same 24,000 we had when we were doing the calculation for the material variances. So 24,000, and the old standards, it says 8 minutes for the old style, right? So 8 minutes, and there's 60 minutes per hour, so 8 over 60 will give us the number of hours, which is 3200 in this case. As for the revised hours, it will be the same 24,000, but this time the new design took 10 minutes to make, right? So into 10 over 60 gives us 4,000. Okay, we still need to copy the formula for the variance, so we'll just copy it from above. Okay, now we need the actual hours worked and the standard cost per hour. So it says SUCO has 24 staff, each of whom works 160 hours per month and is paid a wage of $12 per hour. So $12 per hour is our standard cost per hour. So we can put that in as well. 12. Okay, 12. Now we just need the actual hours worked. Okay, all staff worked their contracted hours in February on production, and there was no idle time. Okay, so in this case, hours paid is equal to hours worked because there's no idle time. And how can we find that? Well, they've told us that they've fulfilled their contracted hours, and their contracted hours were that they have 24 staff and each of them works for 160 hours per month. So 24 staff into 160 hours, and we're calculating the variance for the full month. So this will be 3,840, which we'll copy and paste. We end up with a total labor efficiency variance which is adverse 7,680. The planning component is an adverse 9,600, while the operational component is actually a favorable 1,920. And if we add them up, once again, the planning and operational add up to the 7,680 adverse overall variance. Once again, the requirement is just to calculate it. So we're done with the calculation. We're done with part B as well. Let us move on to part C. Okay. Now, the first 12 marks were calculations, and they took us quite a bit of time. But as always, with variance questions, there will be some marks for calculation, and then there will be a part for analysis. This time it's for 8 marks, and it says assess the performance of the production manager for the month of February. 8 marks worth of analysis, meaning around 8 good solid points need to be made. And we have to assess the performance of the production manager based on all of these variances. So we have planning and operational variances for 3 types of variances for us to do the analysis. Okay. Now, whenever there's analysis for a planning or operational style variance question, there are some standard sentences that you should always write, which will always get you some marks. Okay. What are those sentences? First, we'll write that planning variances are those variances which were caused by factors beyond the manager's control. Hence, we cannot blame him or give him credit for these variances. Okay, standard point about planning variances, that these were variances which were not in the manager's, caused by factors not in the manager's control, because we didn't update the standard properly for certain situations. That's why we cannot blame him if it's an adverse planning variance, or we cannot give him credit if it's a favorable planning variance. Likewise, so you'll get a mark for this. Likewise, you need to mention operational variances are those variances caused by factors that are in the manager's control. Hence, we should assess his performance based on these variances. Okay, so these are 2 standard points and you can get 2 standard marks for these. Okay, after that we need 6 more marks and we have 3 variances, each with a planning and operational component, so we'll touch on all of those. Okay, so let's start with the material price variance. Now when it comes to variance analysis, if you remember in our videos, for each of these variances we covered some details of what could cause them to be favorable or adverse. But we should not be giving generic analysis that, oh, material price variance is favorable maybe because prices fell in the market. No, we need to find this information from the case. What actually happened? We need to link it back to the case. That's the analysis that the marker is looking for, not for generic analysis. Okay, so let's start with the material price variance. Usually when we have a long analysis, it's better to give a heading so that the marker can follow. So we have our material price variance. Let's just write full hand. MPV looks a bit weird here. Okay, so we'll start by the overall. The material price variance was overall a favorable 8,184. Okay, this is entirely based on the planning variance. Okay, because the operational variance, as we saw above, is 0, right? So what was the cause for the planning variance to be favorable? If we go back to our case, it says the school summer dress has been redesigned, right? And the new dress requires 2.2 meters of material, which is 10% more material. That's the material usage variance. Also, the new material has been chosen, which costs less, 5% cheaper than the material used on previous dresses. Okay, so there's our reason. The main reason for this favorable variance is that the new dress says use a new type of material which is 5% cheaper as compared to the old material, right? This choice was based on the decision of the GPST, which was a trust, so the manager has nothing to do with them and has nothing to do with the manager. Hence, he cannot be given credit for this. Okay, now how did the manager perform as far as material price variance goes? The operational variance was 0, so he didn't do well or poorly, he just hit the mark, right? So we'll mention that. The operational material price variance was 0, meaning that the manager hit the target expected of him, which is a satisfactory performance, right? It's not particularly good or particularly bad. Okay, so that's material price variance. Let's move on to material usage variance. Okay, so once again we'll start with the overall analysis. So what's going on? The material usage variance was a resounding adverse variance of 19,680. Okay, and most of that had to do with the planning component, but some of it also had to do with the operational component. So the material usage variance was overall largely adverse by an amount of 19,680, right? Most of this has to do with the planning variance, which was 14,400, and rather than the operational variance, which was 5,280 adverse, right? Oh, let's just mention this was adverse as well. Okay, so what could be the reasons for the adverse planning variance? Well, they mentioned each new dress now requires 2.2 meters of material, which is 10% more material than the previous dress. the reason for the adverse planning variance is the new design of the dresses, which require 10% more material than the previous dresses. This is again due to the decision by the GPST and not the manager's fault. Okay. That being said, the operational variance was also adverse. Okay, so it was still adverse by 5,280, meaning that he used more even after we account for the new dress design that uses 10% more material. He still used more than was expected. What could be a reason for that? Okay, so now we analyze, right? We can use our own analysis to see what could be a reason. So basically we can say the staff was unfamiliar maybe with the new dress and they started making mistakes. It's something new, there was a learning curve, and because of that there was wastage of materials, right? So one of the reasons, we don't need to be adamant that this is the correct reason, right? We're not sure, this could be one of the reasons, so we should word it accordingly as well. One of the reasons for this could be that the staff was not too familiar with the new dress design, and made mistakes. These mistakes caused wastage of materials, which led to this adverse variance. Okay, so we've hit our point, we've covered the main points for material usage variance. Let's move on to the labor efficiency variance. Okay, once again let's start with the overall picture. So what was the overall picture? That the labor efficiency variance was adverse. The labor efficiency variance, the labor efficiency variance was adverse 7,680. This was due to the adverse planning variance of 9,600, because the operational variance was actually favorable 1,920. The operational variance was actually a favorable 1,920. Okay, so now let's analyze. So what was the reason for the adverse planning variance? So it says the manager, the design of the new dresses has a complicated new sewing techniques that needs to be used. The staff required training. Okay, so in fact, before we move on, the staff required training, right? So the new dresses required a new technique, and maybe because the staff weren't properly trained, they made wastage of material as well. So we can link this here as well, right? This could, let's just add another point. This could point out that the manager did not properly train the staff. Okay, so just another point we can add there to strengthen that analysis. Okay, so it says the manager of the sewing department expected each of the new dresses to take 10 minutes compared to the 8 minutes for the previous dress, right? The old style. Okay, so once again, the reason for the adverse planning variance is due to the new dresses requiring a new sewing technique which staff was unfamiliar with. Okay, once again, this was not the fault of the manager. Okay, now here's what's interesting. the adverse planning variance exceeds the overall adverse variance and the operational variance is favorable, meaning if we take out the impact of the new swimming technique and the 10 minutes being used rather than the 8 minutes, the manager actually did the job well. In other words, he didn't take 10 minutes, he took less than 10 minutes on the new dresses. If he had taken 10 minutes, the overall variance would have been an adverse 9,600. Instead, it was 7,680, meaning he took more than 8 minutes but less than 10 minutes, right? So we can write that down. What is the reason that they were able to do the job faster than anticipated? The operational variance was favorable, indicating that the staff took less than the anticipated 10 minutes per dress for the new design, right? This means the manager did a good job in training and pushing them to get the work done on time. Okay, now technically we're done here, right? We've analyzed all the components, 8 marks, we've done a very thorough analysis. That being said, we can also hit some brownie points here because we can link, if we can link some of this analysis across variances to each other, that's where we get brownie points and can really impress the marker. And what point do I have in mind? Well, basically think about it this way. They were doing the work faster than anticipated, right? The manager made them do the work faster than expected. But when you do the work fast, what happens? You also make more mistakes, which was pointed out previously, okay? So maybe they were able to do the work faster, but because of the speed at which they were doing the work, they made more mistakes, which resulted in more material wastage. So we can link those points together. However, it should be noted that because of the faster pace of working, the staff could make more mistakes, leading to material wastage, as can be seen from the adverse material usage variance. Okay, so there's a brownie point as well. Now our analysis is very thorough. Okay, so now we need to assess his overall performance. So how did he do overall? So he got a favorable material price variance, but that was not his credit. Actually, he just did on par with the material price variance. Material usage variance was an adverse variance of 5,280 and operational labor efficiency variance was favorable 1920. So we'll just say overall the manager had a slightly adverse operational variance across the different variances. He did a good job of managing the workers' speed, but that also potentially led to them making mistakes and wasting excess materials. Okay, and then we can just say, based on that, the manager did a relatively, and then you can conclude good or poor job, up to you, right? Relatively poor job, right? We'll say that, but you could argue he did a good job as well by tweaking your wording slightly. Okay, so there we have it, our entire variance question, and you can see the formatting is very good and smooth, so it'll make it easier for the marker to follow. We have the calculations done, we have the analysis done thoroughly, and this is a typical variance question that you can get. So I hope you guys benefited from this, and I'll see you next time.